You just got milked. Well, hot diddly do I have some savage charts for you. Bitcoin is currently rumpaging in a smaller and smaller range and has just gotten a clear confirmation rejection off of one of our most important short-term fib levels. And the question is now, will critical support hold, or are we destined for absolute pain, suffering, and outright humiliation? And this chart shows exactly why 2021 is different from every year that we've ever experienced in these cryptocurrency markets. And why stop at gold? What if Bitcoin also replaces this? Okay, now you're squeaking my language. Welcome back, everyone! I'm your host, Cornelius Cornbread, not to be confused with my cousin, Peter Peppercorn, or my grandfather, Chester Chili Beans. Boy, do we have an episode for you today, as Bitcoin continuously teetering and tottering between our critical levels, and there has still, as we've been talking about for the last few days, has been no decisive make or break move to the upside or the downside. So the question now is, which direction will this move come? And guys, if you've been watching the last few episodes, I think you already know my opinion on that, so we're going to be jumping into that. But as well, we have some very interesting whale data and very interesting other observations about Bitcoin moving forward. Could it do more than replace gold? Oh my goodness, we're going to be talking about that and mucho more. So if you guys are new to the channel, make sure to hit that like, subscribe, and if you're an absolute diddly-umptious savage, make sure to... So if you guys are new to the channel, make sure to hit that like, subscribe, and turn on those post notifications if your piggy bank is looking just thick enough for a squeeze, and if it's not, well, boy oh boy, hang in there, because this year is full of surprises. Yeah, without any further ado, let's dump in. So if we start here on Bitcoin's 1 hour chart, Bitcoin has clearly not gotten even a single 1 hourly close above our 1.618 Fibonacci level. The 1.414 and the 1.618 are the two levels that we are getting squinched and squeezed in. And after we broke below the 414 just a few days ago, 2 days ago, we actually found support kind of at that level, and we did not go down to our next level. But guys, that next level is right down exactly at about 42,000 US dollars, which is a level that I've been talking about for a few days now. So we really need to see what happens here. But as you can see, we're at the bottom of this channel, this Fibonacci channel right now. Next stop would be roughly about that $46,000 level. And breaking below that, I think it would initiate a quick visit to that 42K range, which I don't think we would have any significant long-term closes there, you know, like a 6 hour or a daily. I think if we did come down here, it would be a pretty quick wick, in my opinion. But as you can see, we've just been within the last over 48 hours now, we've just been trading in this same Fibonacci range, just bouncing in between both of these key levels. And not really surprised, we were in the previous one, the previous Fibonacci channel before we did ultimately break out and up here, and then we kind of came up to the top next level, and ever since we kind of rebounded here from this lower level, where we didn't have a single hourly close below this 272 fib level. It's been just trading within this range here. So really the next question is very simple, or the next price move is very simple. If we break above that roughly almost $52,000 level, that would be pretty bullish for Bitcoin if we get some daily closes there, around 51,800 plus. But again, I just would round up to about 52,000 to be safe, because we did have a wick actually all the way up to exactly 52, and we got rejected swiftly there. So that is the top level of resistance we're really looking at. So really, as far as I'm concerned, any trading between 48,000 and 52,000 US dollars per Bitcoin is really nothing significant. Meaning, you know, let's say you look at the chart tonight and it's 51.5. Or if you look at the chart tonight and it's 48.5. In my opinion, neither of those price levels are significant, and they don't indicate either a pump or dump, really. That's still just normal trading within this Fibonacci range. So there's about a $4,000 window that we've been trading in. $4,000 seems like a lot, but considering Bitcoin is currently about $50,000, $4,000 is not that big of a range anymore. It was a huge range back when Bitcoin was only 10K. Right, that was basically half of Bitcoin's price. But now that we're all the way up here at 50K, a $4,000 range of consolidation is basically the same as a $500 range of consolidation back when Bitcoin was, $8,000 or $10,000 US dollars. And same thing here on this 4 hour chart. We continuously get rejected right around that $50,000 to $51,000 level. And we haven't had any significant closes, though, below our lowest fib level so far of the 1.272 here, which is, again, right about a little under 46,000 US dollars. But as far as I can tell, we haven't had any confirmations that we're going to be heading higher here. So again, trend is your friend, and at this point I would recognize this trend as more of a downtrend that we've been in for just even just a few days. So it's really early in the trend. But in my opinion, this trend has now shifted into a downtrend, and I think it's more likely that we continue down over the next few days until we get a confirmation that we're actually going to break up, which, again, looking at this chart, I don't see any of that just yet. We're not above any very key, significant short-term moving averages or anything. This price structure is still pretty sideways, so until we get significant daily closes above some of those levels that we just talked about, then I don't think anything drastic to the upside is going to be happening. But again, the most important thing probably to be looking at right now is just the daily chart, and that we're holding above the 21-day. But as you can tell, I mean, you see the pressure just continuing to pile on this 21-day moving average. We saw pretty much something identical to the very last time we had this, about a month and a half ago at the very beginning of January. We had multiple bounces on the 21-day, but we ended up just setting lower highs. And once we broke this parabolic structure, which we have charted on here, just kind of this white line here, okay? This white line, once we broke that structure and then ultimately also came up and got rejected and set that lower high, in my opinion, that was an ultimate confirmation that we were gonna continue going down. And we ended up going from about 40K all the way back down to a little under 30K. But the main thing about that was we broke the 21-day moving average, and we stayed below it for about 2 weeks. So again, it's still too early to tell if that's a similar move that we're about to see, but we are treading heavily on the 21-day moving average. We don't have any bullish indicators in the very short term, technically, right? Fundamentally is a different story, but I'm just saying technically. And usually when this happens on the charts, it's better if we get a follow through and if we maybe continue down a little bit more. But the main thing to watch for as well is if we do come up here, and over the next few days, if we come up and we just fail to set a higher high, we just set another lower high, then again, I do think it just makes it more likely that this could be a little prolonged, maybe a 1 to 2 week continued pullback, exactly like we saw back here. Again, it's still too early to say that definitively, but if we just take a very similar structure actually to what we just had back here in January, where we ended up, we were on this parabolic structure, we broke below it and then came back up and got rejected as we tried to reflip that. For us now, that would be roughly, if we get rejected around, previous all-time highs, right around like 56, 57,000 US dollars. So if we come back up to that level, and we don't set a new higher high and we just get rejected kind of on this line, then I do think it is likely that we will, at the very least, retest the 21-day moving average again after getting that pump, and then potentially just breaking the 21-day and trading sideways and ultimately finding a bottom. I personally think close to that $42,000 range at the very lowest over the next week or two. But guys, in the meantime, I do think alts could still perform pretty well. Currently, a lot of these alts are not performing well. Ethereum is absolutely not looking very good. It's below its 21-day, and it has been. But there are some alts that are still very close to setting all-time highs. For example, ADA is one that's doing pretty well. There are some other coins. Litecoin is actually doing really well right now as well. And again, that's a trend where we could see alts just continue to rally a little bit, very similar to like what we saw back in January. So even if Bitcoin were to be a little boring over the next week, we could still get a lot of excitement from altcoins. So that's something to 100% watch. But in terms of Bitcoin, for me, this is a perfect topping out point in the short term. Again, if we look on this weekly chart, we came within $1,000 or $2 of our midterm Fibonacci target on this macro chart, this weekly chart. So again, it makes perfect sense that we could continue consolidating maybe for just another week or two here. And what that means is continued downside, right? As I'm recording the video, we broke back below 49,000. Still not super significant in terms of a pullback, but yeah, in my opinion, I think the momentum is shifted in the short term to more of a downtrend, and we ultimately need to find a real bottom, and I just don't think we've found it quite yet. I think that over the next week, we are going to probably see some lower prices, and exactly the price that I'm looking for a bottom is in that $40,000 to $42,000 range for Bitcoin. And that would ideally be, let's say we did go all the way down to 40K would be exactly about 30% pullback, which is what we saw last time, so that's absolutely normal. And coming down to about 42K would be around a 25 to 27% pullback as well. Yeah, and it's illustrated nicely on this daily chart. If we would get a 30% exactly pullback, it would bring us down to about $40,700. But that key range is, $40,700 to up to about $42,000 US dollars. 42 would be roughly about a 28% pullback. So again, 28 or 30%, pretty much the same thing. Again, it would be right around that 50-day moving average. But yeah, that's ultimately what I'm looking for. If anything changes, that's why I'll say it. I'll say so in an update. But everything I've seen so far, it's still basically just the same thing I've been saying for the last few days. You might look at these charts and see Bitcoin above 50K, 51K, and think, oh yeah, that definitely was the bottom. We're going to be setting new all-time highs in the next few days. But that's just normal for Bitcoin to be volatile, where we do have, you can see this candle all the way up to about 52,000. But look at us now. Now we're below 49,000. So again, just because price fluctuates in the short term doesn't mean anything. Like I said, if we start getting significant closes above 52,000, then that would be one of the first major indications that we could be bullish again. But we haven't had that once. And what I mean by significant closes is like a few 6 hours or, like a daily close or something like that. But again, guys, we haven't seen that. So in the short term, I still personally think that it makes more sense if Bitcoin would continue pulling back. But ultimately, that's not the case for alts. I think alts could rally while Bitcoin initiates a 1 to 2 week pullback if that's what happens. And as well, this is just large transactions mapped out here on Whale Map. And you can see, here are the transactions. I have it set right now to specifically transactions that are above $20 million worth of Bitcoin. And you can see, guys, if you just go back in time, you can see that number, or you can see the number of transactions above 20 million plus has been absolutely exploding this year. And this is comparing like the last 2 to 3 years. So basically, it's just been there's more and more big buyers, big transactions in Bitcoin. And it's probably because of the institutions. It's probably because of these billionaires. It's probably because higher net worth individuals are getting into Bitcoin. And it's perfectly illustrated here on this chart. So that's ultimately very bullish, I think. And then as well, if we switch to this, so Kathy Wood from ARK here is saying that Bitcoin may actually replace bonds as well, right? We're talking about gold, but bonds is another thing. It says here, you think about the traditional 60-40 stock bond portfolio, but look what's happening to bonds right now. If we are ending a 40-year secular decline in interest rates, that asset class has done its thing. What is next? We think crypto could be what is next, basically, right? We know there is a concern given all the quantitative easing and the no rules-based monetary policy out there. Fixed income has done 40 years of really hard work. But Bitcoin represents a new asset class. Why not invest into it? For example, the DXY dropping 7% on a trade weight-based basis last year and falling further this year is another stimulus. It should be stimulus for gold, but Bitcoin is getting the incremental flows that might go to gold. So basically, people are not moving their capital to gold as a store of value, and that's why Peter Sniff is always so mad. They're moving it to Bitcoin, which is much, much more enticing and much, much more interesting as well. Okay, you wonder why Peter Sniff has been extra crabby, because this is the perfect setup, typically, for gold. This is where a lot of money could be flowing into gold. But it's not. It's flowing into Bitcoin because Bitcoin is a better alternative. And the more you research it, the more you will understand and agree with that. While some crypto critics say Bitcoin has no use cases, Wood disagrees. It represents insurance against unhinged monetary policy and outright wealth segregation in some countries. Absolutely, right? Bitcoin is basically insurance against what is happening with the Fed's decision to print unlimited money. And she says here, all of that adds up to trillions of dollars of market cap potential, up from about 900 billion right now. So basically she's saying there's trillions of dollars of potential in market cap there for Bitcoin. And I would also take a step further and say there's trillions of dollars in market cap potential as well for the broader cryptocurrency space, including other altcoins besides just Bitcoin, right? There's more than just Bitcoin, and some of these coins can do things that Bitcoin simply cannot do. And so naturally what that means is that certain market caps could be allocated to these other coins that can do other things, whether it is lending or traditional banking applications that decentralized finance can do. There are some applications that are out there that can encapsulate trillions and trillions of dollars of value. So basically what I'm saying is the cryptocurrency market has an immense amount of space and capital that it can still absorb. And yeah, we have a long way to go. So if you guys are new to the channel, make sure to hit that like, subscribe, turn on those post notifications. If you're interested in trading, make sure to take advantage of our Bybit and Femex deposit bonuses below. Only trade if you have experience and you want to support the channel. Never trade more than you're willing to lose. I would never recommend more than 5 to 10% maximum. And yeah, without any further ado, that's it for me. Bye-bye.